Mortgage rates are starting to fall, and everyone's asking the same question: is now a good time to buy a house? What most people don't understand is that if rates keep dropping, home prices will probably go up. But if you wait too long, you might miss the best opportunity that we've had to buy a rental property or a primary house in years. Now, we've seen mortgage interest rates absolutely explode over the past few years, and it hit close to 8% for a 30-year fixed in 2023. That is just incredible. And also, home prices have hit an all-time high recently, so there's really no winning for anyone who's in the market to buy a house or a rental property. But I think that in the next year or so, there's going to be opportunities in the market that you need to be aware of. Now, in recent months, we've also seen the chair of the Federal Reserve, Jay Powell, say that the Fed will continue to decrease interest rates. And what that means is it doesn't necessarily mean that mortgage interest rates are going to fall, but they are correlated historically. And I do predict that we will see somewhere in the mid to low fives by the end of 2026. Also, President Trump in May will likely get in his pick to fulfill that role and replace Jay Powell. So I do think that we will see mortgage interest rates continue to fall, and they are falling right now. What we're seeing is low sixes, like 6.3, 6.4%. Like I said, by 2026, I believe we'll be in the fives. And I want you to know that there's no bias here. There's no BS. I'm not a real estate agent trying to get your business. I'm just a real estate investor trying to build a community of people who want to invest in real estate and dividend stocks. And what I truly believe is that there are going to be opportunities opening within the next year or so, because we're going to be in a sweet spot where rates are falling, but they're not going to be at the point where everyone's just going to come back in and flood the market. And I think that we're going to be able to get our hands on some deals, make some good offers. And I'm actually going to be in the market here in the coming August, so just about 10 or 11 months. I'm looking to buy a multifamily duplex that I can rent out one side and live in the other, call it a house hack. And then eventually I'll move out and have both sides rented. But that's my game plan. I'm going to be looking for deals, but I'm always asking myself, what interest rate am I going to get? And that's what I want to talk about today. For those of you new here, welcome. I'm Joe. I'm currently keeping track of my monthly passive income from stocks and real estate on every thumbnail of each YouTube video. We're currently at about $430, and the goal is to get to $10,000. It seems ambitious, I know, but we're going to get there one dividend and one door at a time. So the Federal Reserve is starting to lower interest rates, and I do believe that we will see mortgage rates fall. And what that means is every single time the mortgage rates fall by 1%, that gives you about 10% more power in terms of affordability. Now, the harm is if that increases housing prices, it kind of cancels each other out. But let's say that housing prices stayed the same. If mortgage rates decreased by 1%, that gives you about 10% more purchasing power. So if you were going to purchase a $500,000 home, let's say at a 6% rate, and you could afford that, well, if rates dropped to 5, that means you now could afford about a $550,000 home. And that can be tremendously valuable to you if you want to move into a home soon or you want to get a nicer house. But for that exact reason, people know this. So that's why demand starts to come up and you see housing prices start to rise as interest rates fall. And what we're seeing in the US right now, we're seeing a lot of markets with kind of stagnant growth out there, but there are still a lot of markets that are appreciating in value. Some of the markets that are hurting though are in Florida. And I currently own a rental property in Florida that I bought in 2022. And I've noticed it hasn't appreciated greatly over the past few years, but I do believe when interest rates start to come down, demand will spur again and we'll see those housing prices appreciate at a normal probably 3 to 4% rate. And that can be very powerful for you as an investor, or even if you own your own home. Real estate is one of the best asset classes out there. I truly believe that because of the component of leverage. If you use debt smartly and you use leverage on your real estate assets, you can purchase a $500,000 home with as low as 3.5% down. But let's say you put $100,000 down, you now own that asset with that 20% down payment. And every time it appreciates, you're not only making that 3% appreciation, you're making like 15 to 20% because You own that whole asset, but your money is so powerful when it's levered. So when interest rates start to fall, a few different things happen. We see buyers just jump back in, and we see a lot of people get FOMO, fear of missing out. And what we saw during the COVID pandemic when rates were low, and what we saw after, is people were lining up around the block to just see a home. And when rates start to drop again, I wouldn't be surprised, because of the demand that we've seen in the past, if that same thing happens. And what that means for you is, if rates start to come down a little bit and you think that you can make a deal work, just jump on it. Buy the house. You can always refinance later. And I know what you're going to say. That hasn't worked for people in recent years with the whole refinancing thing. They thought rates were going to come down. But I truly believe, I don't have a crystal ball, but I truly believe that we will see fives in the next year or so. And you can always refinance. Let's say you get your hands on a 6.25, 6.3 today. You can probably get in the low fives within a year. That's my prediction, at least. So there's a few things that you need to be aware about if you're in the market, especially as a real estate investor. And the first is, make sure that you're buying properties that have positive cash flow, not negative cash flow. You don't want to be losing $300, $400 per month on your rental property. So you need to go out there and do the math, buy a property that makes sense on paper. Don't just buy off emotion, and do the math. You want a rental property that has positive cash flow. The second thing you need to know as a buyer today is, I really believe that there's deals to be had out there, especially right now when demand is not super high. Let's say a property has been sitting on the market for months, and there's even a lot of deals in the multifamily space, the small multifamily space, which is 2 to 4 units. You can get a great deal, make a lowball offer. What's the worst they can say? They can give you a counter offer, and you can go from there. Find you a deal in today's market. And the third thing that you need to keep in mind as a real estate investor, or even if you're just buying a property, if you're purchasing fixed rate debt, that means you're locking into a 30-year mortgage today. That means in 10, 20 years, when you're still paying that property off, your monthly payment's going to be about the same. Yes, taxes will probably go up a little bit, but your principal and interest will be the exact same. Meanwhile, your wages and inflation is going to make that payment less and less over time. So always remember that fixed rate debt is one of the most powerful things that you can do. And using a 30-year mortgage loan is incredibly powerful. And like I said, I'm going to be in the market coming this summer, probably in the August timeframe. So I'm hoping interest rates are going to fall. And I'm looking for a multifamily, a duplex. I believe that if I can get my hands even on just one duplex and add that to my portfolio, it can really skyrocket my net worth in terms of cash flow and appreciation over time, not to mention the great tax benefits that you get from real estate, like depreciation. And you can also do what's known as a 1031 exchange, where you just keep deferring taxes when you sell a property if you move it into another property. So like I said, in the coming months, I really believe that interest rates will start to fall. And as an investor and someone who's going to be looking for a multifamily within the next year, that's very exciting to me. I love talking about real estate, and I love investing in real estate. It's very exciting to me. Sure, we on this channel, we invest in dividend stocks and we invest in real estate, but real estate, there's something about it, right? Like being there, owning the actual property, you can improve it. It's not like when you own a stock, the people in the C-suite have full control. When you're a real estate investor, you absolutely have full control of your asset. If you want to make renovations and upgrade the kitchen, the bathroom, you can absolutely do that. It's within your power. But we like to diversify. We like to own both. And I want to create a community of people who like real estate and the stock market. So thank you all so much for watching. Make sure you hit subscribe if you like this kind of content. We're just getting started here. We're on the journey to $10,000 per month in passive income. Thank you all so much. I'm out.